Hi, everybody. I'm Lucia Jr., and welcome to Vaulted Views, where we explore the elevated perspectives that drive success in money, business, and life, specifically for you, the financial advisor, and to help you rise above the noise and to build businesses with real purpose and lasting value. So today's episode marks the finale of season 2, and I want to start by saying thank you. So whether you've been here with us since the beginning or just recently discovered the show, I want you to know I am so grateful that you're all here. So as we close out this season, I want to share a quick update on where we're headed next. In season 3, we plan on expanding the show, but not really changing its heart. You can expect more solo episodes of yours truly, where I break down the ideas, systems, and strategies I've used to help build a multi-billion-dollar wealth management firm. But we'll also be sprinkling in some interviews with financial advisors, business leaders, and prominent individuals. These are the people who've built incredible careers and can help you think bigger as a financial advisor and a business owner. So I want you to know this podcast is still for you, the advisor who wants to grow, lead, and create something that really lasts. And today, in this final solo episode of the season, I want to speak directly to that community. So we're diving into what it really means to be a fiduciary and how combining that mindset with a powerful income planning strategy like the bucket strategy can help you better serve your clients, scale your business, and build what I call real enterprise value. So let's get into it a bit. It all begins with your mindset, the vision you carry for your business. If you're a financial advisor listening to this, I want to challenge you. Are you operating as a fiduciary because you have to, or because it's core to your vision? That's important. Think about that. Acting as a fiduciary isn't just a legal responsibility. It's a business model decision. It's a long-term play that builds trust, loyalty, and client satisfaction. And we now have the data to back it up. So let me share some of that with you. Clients who believe their advisor is a fiduciary, they report, believe this, a 77% higher satisfaction and are 73% more likely to stick with that advisor over the long term. Think about what that means. Higher retention, deeper relationships, and more predictable revenue for your business. That's what builds a business with enterprise value and not just being a glorified salesman. So now let's talk about how we help clients through turbulent times and how that adds lift to your business. So we're all in the business. We understand the market goes up and it goes down. But our clients, they still have income needs. They have fears, they have goals, and family obligations. So this is where the bucket strategy comes in. This is not just an investment strategy. It's a behavioral strategy. It gives your clients permission to ride out volatility with confidence. But here's the real kicker. It can also become the backbone of your business model. Let me explain. When you and your team use a standardized bucket framework, buckets 1, 2, and 3, whatever you want to call your buckets, using value averaging, asset location, and tax management, you start to create consistency within your firm. You reduce panic, you improve outcomes, and you start to scale your client delivery. That's what I call lift, rising above the reactive and chaotic parts of this business. From there, it's about setting the right course, growing your firm with intention and purpose. So advisors who integrate fiduciary values and proven planning systems like the bucket strategy don't just grow bigger, they grow smarter. You're not just managing accounts, you're delivering a repeatable, branded experience. And that experience becomes your reputation, your differentiator in the market, and your trajectory. That's the difference between working in the business and working on building a business. So now let's dig into the numbers and structure and why this matters so much during volatile times like we're experiencing right now. Lately, the markets, as you know, they've been swinging again. Headlines are chaotic, tariffs, all the drill, and volatility is creeping back into our portfolios. But here's what I'm noticing across the advisors I work with. They're not getting flooded with calls. Clients aren't panicking. In fact, most of them aren't even asking about the market. And for the few that do call, the conversation goes something like this. Hey, I'm just checking in. Should we be worried about everything that's going on? And the advisor simply says something like, hey, remember, we have a bucket strategy in place. Your near-term income, it's dialed in. We're not selling equities right now. You are right where you need to be. And just like that, the stress seems to disappear. The conversation shifts from fear about the markets to what's going on in their life, what's going on with their family, their health, their legacy. That's where real planning happens. You all know this. But that's the power of structure. That's the power of trust, and it's backed by data. So here's some more data for you. Historically, there's virtually never been a 15-year period where the S&P 500 produced a negative return. That's why we typically design buckets 1 and 2 to last 15 years, to give clients time and confidence to ride out short-term market turbulence. And here's the kicker. If you spent all your money from stocks over the second 15 years of retirement, the risk of fully depleting your portfolio due to sequence of returns is just 1%. That's a 99% success rate. That's why this strategy works. It's not just about risk tolerance, it's about time horizon and structure. So for you as the advisor, that means fewer emotional calls during volatility, clients who stay invested and on track, predictable recurring revenue, and a business model that someone else could acquire, scale, or replicate someday. Fiduciary thinking plus intentional structure, that's how you serve your clients and build long-term business value. And finally, none of this matters unless you execute. So if you want to build something that lasts, something that someone would actually want to buy one day, this is where you start. Commit to a fiduciary standard. Not because you have to, because it's the right thing to do and it pays off. Systematize the bucket strategy, not just for your clients, but for your business. And start building your vaulted view. Not a job, not a practice, but a business that delivers value even when you're not in the room. Well, guys, that's about it. Thanks for joining me on today's episode of Vaulted Views. If you're serious about transforming your advisory firm into a true enterprise with real systems, client trust, and scalable value, this is your blueprint. So until next time, stay elevated, stay strategic, and stay vaulted. I'll see you next season.